A warning to retail investors. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee here, and I thought we'd have a look at this article written by James Hall from news.com.au discussing ASIC's extraordinary warning to retail or mum and dad investors. And they're saying it's more akin to gambling. Now, I know we have some avid traders who watch the channel, and I'd be interested to hear your take on what ASIC has released. Now, I'm not really a fan of ASIC. They take my money every year for the registration of my business. When I tried to get a director of a company, done for trading while insolvent, they pretty much ignored it, even though I'd won a court order against him, and he didn't pay me 15 grand. When I reported a scam, that is, a business registered under ASIC that was scamming people illegally in the crypto space with a dodgy crypto wallet, they didn't do anything about it. So, there you go. I mean, I'm sure they've got a use somewhere. I guess it's keeping people employed, and they can feel proud that they're working for a bureaucratic organization using money to keep consumers safe. But forgive me if I'm a bit skeptical about them. Maybe someone in the comments can let me know a good experience you've had with ASIC. I'm sure we can all bitch about him, but does someone have a good experience with him? That'd be a gem. That'd be rare. Okay, so let's have a look at this. Social distancing measures have worked wonders in flattening the curve of the number of pandemic cases, but it hasn't stopped the pseudo-stock trading experts spurking their knowledge on how to get rich quick. Well, if anything, it would grow that, wouldn't it? And the whole thing about getting rich quick, that's a bit of luck, I reckon. We all know them. They're in the WhatsApp groups, the Friday Zoom knockoffs, or the flash-in-the-pan house party rooms. I don't know what any of these things are. I'm not even using WhatsApp. I don't really use Zoom for anything other than a few work meetings. House party rooms? Does this mean I'm a boomer, guys, if I don't know what these apps are? Have I officially migrated over? Oh, well, I guess it's bound to happen. Telling anyone who's listening how this is the time to buy as the stock market tumbled. Well, I guess I'm used to Telegram for all the crypto spruikers. That's where I've seen it. The problem is these sudden heroes, also known as retail traders, have put their money where their mouth is and lost. They've lost big. The number of Australians day trading the share market during the pandemic has spiked to such aggressive proportions, the financial watchdog has taken the extraordinary measure of warning amateur investors to cool it. Here's one question I put to you, because I've got an account with our IG and I've played the market a little bit. Right now I'm just stepping back. I'd like to invest in the platforms people are using to do this, because they're going to make money no matter what happens. Are they good dividend payers? It's worth doing some investigation. We found that some retail investors are engaging in short-term trading strategies, unsuccessfully attempting to time price trends, the Australian Securities and Investment Commission said when releasing the findings of analysis from the end of February to the start of May. The increase of trading frequency, as well as the spike in the number of stocks traded per day, reveals more Australians are day trading, exposing themselves to destructive losses. Well, that's the risk they're taking. That's the risk they're taking. Even market professionals find it hard to time the market in the turbulent environment, and the risk of significant losses is a regular challenge. At the moment, yes, it's all crazy. I mean, what we'll do is I'll bring up trading economics and we'll have a look at where the market, everything's in the green today. ASX 200 is up to 5,400. We'll have a look here. There you go, 54. It was up at 55 a few days ago. Then it went down to 5,200. Remember, it crashed all the way down to, 4,500, 4,400? So, but I can see how, if you've seen a level at this psychologically, and you think, oh, it's worth 7,000, it was up there. So you think that you'll just see that as a bargain. But if that's the price now, maybe it's good news. The market it's an odd emotional representation of reality. So for retail investors, to attempt the same is particularly dangerous and likely to lead to heavy losses. losses that could not happen at a worse time for many families. Retail investors chasing quick profits by playing the market over the short term have traditionally performed poorly in good times and bad, even in relatively stable, less volatile market conditions. Over the period, turnover from retail traders rose from 1.6 billion in an average period to 3.3 billion. Nearly 4,700 new accounts were registered each day, which is 3.4 times more than usual, while a huge number of dormant trading accounts were re-registered. So people are getting into it, into stocks and shares. I mean, there are a few different strategies. There are people that are using, put and call options and all these other tricks of the trade to try and read the market. They're doing TA, whereas I think personally I'm probably too emotional for that type of stuff. I don't have the hands of steel or hands of diamonds that you need. Just look at all the exciting stories. What is it? I found on Reddit, Wall Street bets. Look at some of the insane losses and just downright dodgy things people have been doing on that. Get your fix from that before you jump in. According to Google Trends, search interest for stocks and shares surged to an all-time high in March. Shares-related searches soared 227% last month, while the phrase shares to buy now spiked 1,600% in the past 2 months. Berman Chief Investment Officer Yulia Lee said uneducated day trading is as dangerous as rolling the dice or punting on greyhounds. Most first-time investors see the prospect of making lots of money over a short period of time, and it's more akin to gambling than anything else, she told news.com.au. When it comes to successful investing, it's not necessarily about trying to make as much money as possible that makes a successful investor, but it's about understanding the risk management side of things. Often it is by controlling the risk that you become a successful investor over time. Ms. Lee said, these market punters are comparing the current value of shares with the lofty heights of January and the ASX's all-time high of February 20th, expecting prices to snap back once the pandemic fears and restrictions ease. But in actual fact, you need to re-evaluate the information that's available, and it could be that the circumstances from valuing the market have changed, which they have, and there's more risk, she said. Investment experts also say that the afterpay effect had spurred get-rich-quick traders as the popular stock recorded aggressive and volatile rises and falls. When a lot of the younger generation look at investing in the market, they go with names they're familiar with, and Afterpay is a big one, she said. It had performed well, so they might get a few lucky hits and think this is an easy way to make money, when in actual fact, when volatility spikes, you need to be very careful on the risk management side. It's fantastic that people are getting involved in the market. Just go in with the expectation that it does take some time to learn how to invest, and don't expect to become a millionaire overnight. I look at it as more of a process. If I was to learn any trade, it would take 2 or 3 years. And it's the same with the markets. It's important to learn the lessons. Otherwise, at some point, you could end up getting burnt. So here we go. The top trending related topics for shares: Virgin Group, State Bank of India, Shell Select Flight Centre, Oil Search, Qantas, Air New Zealand, Royal Caribbean Cruises, Webjet, Royal Dutch Shell. I wonder how many people were shorting some of these stocks, guys. The top trending questions for shares in the past 2 months in Australia: should I buy shares now? Which shares should I buy? How to buy Qantas shares? Will Webjet shares recover? See, I should probably make a video on each one of these. How to pay for Comsec shares? What are index shares? Where to buy shares? I just want to learn how to do covered options trading here in Australia. I like the idea of doing that, but that's something for completely different strategies. Or I think what's interesting is the dividend strategy, just slowly building up a portfolio to just bring in some dividend income over time. That's what's got me the most interested at the moment. But I'm waiting to see how the economy gets affected, because while the market, we have a look here, while it's kind of bumping between 52 and 55 at the moment, let's see where this goes in 6 months' time. Let's see what happens when more houses are having a forced sale, when people are getting desperate, when unemployment spikes, when the banks are no longer giving people a rate holiday. Let's see what happens then. Maybe some people are forced to sell their portfolios to cover other expenses. It's something to keep in mind. As always, please let me know your thoughts and opinions. Should the ASICs have issued this warning? Do you know of anyone who's gone in and made a mint? Or have they all just burned away their money? The problem is this can often, well, it can feed on the same impulse as gambling. And if you leverage it, people can get into a lot of trouble. Anyway, guys, thanks for watching. Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via our affiliate link at Amazon or eBay or Independent Reserve and Kucoin. You can send us gold using Gold Pass, support us by buying merch from HeiseSays or PayPal. Take care, guys. See you next time.